Hello and welcome to My Finance Teacher. Today is 30th of December 2017. Let's look at the US dollar as something very interesting is happening with it. Strange and interesting. And it has implications for a lot of commodities, including gold. So over the last several days, US dollar is moving down substantially, and over the last couple of days it broke below the recent low that we saw in late November. Additionally, it was rejected back below the 20-day moving average. It couldn't stay above its 20-day moving average. So that is quite important because we are only at the beginning of this daily cycle in US dollar that started in late November. And daily cycles last for about 2 months usually in US dollar. And since we have broken through the recent low, we're going to create a lower low, and that means that it's very likely the daily cycle in US dollar has already reached its top only after less than 2 weeks of moving up, only after less than 2 weeks of an advancing phase of this daily cycle. So if the rest of the duration of the cycle is going to be the declining phase, then we have 5 or so weeks of downward momentum in the US dollar. And that might bring us close to around 91 on the US dollar index over the next several weeks. Additionally, this breakdown below the recent low is also important because we are relatively early in the intermediate cycle in the US dollar, which started in early September or in mid-September. So the main question is, in relation to this intermediate cycle, is whether it has already topped in early November close to 95 on the dollar index. If this intermediate cycle has already topped only after less than 2 months of advance, and if this intermediate cycle has already entered the declining phase, then we have another 2 or 3 months, 3 or more months of downward momentum over all of this remaining duration of the intermediate cycle. So if that happens, then dollar might move even lower than 91 or sub 90 on the US dollar index. However, in the very short term, over the next several days, we might see a bounce up in the US dollar for a couple of reasons. Firstly, it's stretched too far below the 20-day moving average, so reversion to the mean can pull the US dollar back up a little bit. Additionally, the 14-day RSI is very close to oversold levels. That also can help the US dollar to bounce up a little bit. But as we mentioned, over the intermediate term, within the daily cycle, the US dollar is forming this trend line, although it's not established yet. But within the trend line, US dollar might bounce up for a couple of days, as I mentioned, and continue the declining phase of this daily cycle for the remaining duration of this daily cycle, which means that sometime in early February, US dollar might be close to 91 on its dollar index. In the longer term, on the weekly chart, in relation to the intermediate cycle, if we have already seen the top at 95, then we still have a few more months, 2, 3, 4 more months of downward movement, which can bring us, well, anywhere below 90 on the dollar index. For example, 88 is a good number as any other below 90. So that might happen sometime in April 2018. So if that is going to happen with the US dollar over the next several months, then that bodes well for gold and some other commodities. Gold actually has started its new intermediate cycle 3 weeks ago. We are now in the advancing phase of this cycle, and the advancing phase might last anywhere between 2 to 4 months. Generally, these intermediate cycles last for about half a year. If dollar is going to break down over the next 3 months or so into April, then that can help gold move substantially higher into April 2018. That will help gold break through the recent high at 1360 and the high in mid 2016 at 1380 or so. So over the next 2-3 months, I think gold will reach this resistance zone at 1400, and then it's likely to enter a declining phase of this intermediate cycle into mid 2018. So that is my projection for the US dollar and gold. I have something else to say about the channel as well. There's been a question from one of the subscribers relating some other sources for my analysis. Recently, I have started posting some of my analysis on this website, Steemit. It's basically a platform similar to Facebook, but with monetization of the content as well as the comments that you guys might be providing. So there is this financial motivation for me as well as for you to engage with the content creators within this new platform. Join me on Steemit and subscribe here on YouTube as well if you haven't subscribed yet. Hit the like button and hit the upvote button on Steemit. Thank you for your attention.